Kraken and Robinhood Q2 earnings, crypto market insights. In a landscape where market turbulence is the norm, two titans of the crypto world, Kraken and Robinhood, have unveiled their Q2 earnings reports, showcasing not just resilience, but a bold pivot toward tokenization and global expansion. The numbers are impressive, but the strategies behind them are even more intriguing. Let's dive in. Kraken's Q2 report reveals a fascinating mix of growth and challenges. The exchange saw an 18% year-over-year revenue increase, hitting $411.6 million. However, adjusted EBITDA took a 7% dip, landing at $79.7 million. This discrepancy highlights the complexities of navigating a volatile market. Despite this, Kraken's total exchange volume surged by 19% to $186.8 billion, and assets under custody jumped by 47% to $43.2 billion. The slight dip in quarterly volume, down 11%, was chalked up to seasonal fluctuations and uncertainties surrounding U.S. tariffs. But here's where it gets interesting. Stablecoin fiat spot volume dominance skyrocketed from 43% to 68%, indicating a clear shift toward lower-risk trading strategies. Meanwhile, Robinhood's crypto revenue soared by a staggering 98% year-over-year, reaching $160 million. This surge was driven by a 32% increase in trading volume, totaling $28 billion. The company's total net revenue climbed by 45% to $989 million, while net income surged by 105% to $386 million, exceeding Wall Street's expectations. CEO Vlad Tenev attributes this growth to Robinhood Chain, their new Layer 2 blockchain focused on tokenization, and the strategic acquisition of Bitstamp for $200 million. This move positions Robinhood to tokenize previously inaccessible assets like private equity and real estate, opening up new avenues for investors. But here's where it gets controversial. Both Kraken and Robinhood are aggressively pursuing real-world asset RWA tokenization, but they're facing significant regulatory hurdles. Kraken is planning commission-free stock and ETF trading in the UK, Europe, and Australia by late 2024. While Robinhood aims to leverage its 25 million users and $1 trillion in custody assets to dominate the US market for tokenizing alternative investments. Tenev boldly claims this strategy will be very difficult for competitors to replicate, but regulatory scrutiny in Lithuania and pushback from firms like OpenAI over equity-like tokens could complicate things. And this is the part most people miss. Despite all the innovation, Ethereum still reigns supreme in the RWA tokenization market, holding nearly $7 billion in assets. Layer 2 solutions like zk-Sync Era are lagging behind with $2.4 billion, capturing just 19% of the market. However, Kraken's rumored $500 million funding round, aiming for a $15 billion valuation before its IPO, and Robinhood's integration with Bitstamp could disrupt this balance, especially as stablecoins gain traction. So, what do you think? Will Kraken and Robinhood's ambitious plans pay off, or will regulatory challenges and market competition prove too steep? Share your thoughts in the comments. You'd love to hear your perspective. Kraken Q2 2025 Financial Highlights News Features. Imagine a world where anyone can trade anything, anytime, anywhere. This is the vision of Kraken, a multi-asset platform that's revolutionizing the way we think about financial services. As we dive into Kraken's Q2 2025 financial highlights, you'll see that this vision is becoming a reality. But here's where it gets interesting. Kraken's success is not just about numbers. It's about creating a new financial system that's more accessible, more innovative, and more resilient than ever before. In Q2 2025, Kraken's pace accelerated, with new products launched, global access expanded, and infrastructure scaled. The company is pushing the boundaries of geo-expansion, establishing itself as the go-to infrastructure provider for the next generation of financial services. from crypto to stocks to tokenized assets. Kraken is redefining what's possible and ensuring that more people can access investment opportunities globally. But what does this mean for the average investor? Let's break it down. Kraken's strong financial results were fueled by consistent and disciplined delivery. The company delivered revenue of $412 million in Q2 2025, an 18% year-over-year increase. Adjusted EBITDA came in at $80 million. The total exchange volume was $186.8 billion in Q2 2025, up 19% year-over-year. But here's the thing. Q2 volumes decelerated quarter over quarter, as Q2 tends to be a seasonally lower quarter for trading activity across the industry. So, what's driving Kraken's success? There are three key trends to watch: expanding volume market share, growth investment, and expense discipline. Kraken continued to grow its share of spot volume, driven by investments in product experience and a strong position in stablecoins. The company is also strategically investing in innovation, expanding its product suite to accelerate growth. And, to fortify its business across all market cycles, Kraken remains focused on strengthening operating leverage to build a sustainable business. But what about the Pro Trader platform? Pro Traders are the heartbeat of Kraken's platform, providing liquidity and powering the development of more products for consumer and institutional businesses. In Q2, Kraken launched several new products, including commission-free equities trading, tokenized assets, and an all-in-one global money app. The company also enhanced its Pro Trader capabilities and offerings, introducing a full-service prime brokerage and a white-label solution for fully compliant crypto trading. And this is the part most people miss. Kraken's professional product updates are a game-changer. The company debuted Europe's largest MiFID-regulated crypto futures suite and introduced 24/7 FX perpetual futures on Kraken Pro. In the US, Kraken launched a regulated derivatives offering for US users, providing direct access to crypto futures listed on the CME. But here's the controversy. Some argue that Kraken's expansion into traditional financial markets could lead to increased regulation and scrutiny. Others see it as a necessary step towards mainstream adoption. What do you think? Should Kraken be pushing the boundaries of traditional finance? Or is it a risk too far? Kraken's institutional product updates are also worth noting. The company opened a full-service prime brokerage, unifying best execution trading, qualified custody, deep multi-venue liquidity, and 24/7 white glove support for institutional clients. Kraken also added reward-gearing USDG for institutional and HNWI clients, and added custody support for SOL and XRP. And the company launched a white-label crypto-as-a-service solution, letting banks, brokers, and fintechs add fully compliant crypto trading within weeks. But what about consumer product updates? Kraken introduced US equities trading in the Kraken app, giving clients the convenience of managing stocks and crypto side by side. The company also tokenized 55 blue-chip equities and 5 ETFs on the blockchain, opening round-the-clock equity exposure for eligible clients outside the United States. And Kraken launched an all-in-one global money app, letting clients pay, transfer, and earn across 300-plus crypto and fiat assets in more than 160 countries. But here's the thing. Regulatory progress is gaining momentum in developed and emerging markets around the world. Kraken became the first exchange to receive authorization from the Central Bank of Ireland under MiCA, positioning the company for accelerated growth across 30 European markets. The company also secured a restricted dealer license in Canada, further expanding its regulatory footprint. And in the US, the stablecoin-focused Genius Act was signed into law, marking a major milestone. But what does this mean for the future of crypto regulation? Should we expect more countries to follow suit, or will the regulatory landscape remain fragmented? Kraken's commitment to transparency is also worth noting. The company announced the completion of its latest proof of reserves for supported cryptocurrencies custodied securely by Kraken as of June 30th, 2025. Reserve ratios as of June 30th, 2025 are available, and clients can confirm their assets are fully backed on-chain. But here's the question. Is this enough? Should Kraken be doing more to ensure transparency and trust in the crypto industry? As we look to the future, Kraken's outlook is promising. The company is focused on taking Kraken to the next level, with key initiatives on the horizon, including international equities, tokenized equities, Kraken debit cards, and NinjaTrader growth. But what does this mean for investors? Should we expect more innovation, more growth, and more returns? Or are there risks on the horizon that we should be aware of? The answer, of course, is complex. But one thing is clear. Kraken is building the backbone of a new financial system. One product, one market, and one breakthrough at a time. So, what do you think? Are you bullish on Kraken's future? Or do you have concerns about the company's strategy? Let us know in the comments.